Good morning, everyone, and welcome to Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. It is April 15th, Thursday, April 15th. Traditionally would have been tax day. And, I guess that's trying to find a silver lining. With COVID, we got tax day pushed back.
Is that bad?
It's really grasping.
I mean, don't worry. The government's still charging you. If you owe, they're still charging you from January 1. So it's,
Exactly.
One of those things. You don't have to pay us till later, but we're going to put the interest fees on. But that's the most unfair thing ever, right? If you owe, you have to pay taxes from January 1. But if they have to pay you back, you don't get
You're not
anything,
getting anything.
right? That doesn't seem like a quality fix, that one. Come on, bud.
Yeah, I don't think that's going to happen. All right, before Brian and I jump
Definitely
definitely knows, right? Before I jump into hot spots in the market today, and we've got some things to talk about because some reports came out this morning. So today should be an interesting session. I do need to share that trading involves risk. It may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So here, I'm actually going to flip this over here, Brian, while you play with your charts, and I give the quick recap. Here's the top line stories. Number one, retail sales just came out. Previously, they were minus 3%. We knew the economy was struggling. This time, they were forecast to come out at 5.9%. Hey, we're heading in the right direction. The actual number came in at 9.8%. We just blew out retail sales. People are spending money. The economy is going to start heating up again. We're seeing that. Not only that, we had initial jobless claims. Forecast to come in around 700,000 new initial jobless claims. They only came in at 576,000. So
with an adjustment, though, previously, though. They did raise
and there was an adjustment. Yes, there was an adjustment. I'll let you get into that. But in the end, this is what we're going to talk about. One, we're going to talk about oil. Yesterday was an interesting day. Oil made a very significant move. It just blew out of the price range. But I think it's a combination. Not only are supplies down, which would drive up price, but demand is going to start heating up if the economy starts really firing. So you're kind of getting it on both sides with oil, which was a surprise. It was definitely a surprise.
Yeah.
And we're going to look at that. We're going to look at U.S. equities right now with all this positive news. Dow's, everything's open in the green. Dow's up 0.5%. 160, 170 points. NASDAQ up a full percent. The S&P up 0.6%. So we're opening in the green. Things are looking good. Brian, let's jump into it and do some technical analysis on some of these charts.
Yeah, sure. I mean, as you mentioned, crude oil yesterday was probably the biggest outlier. We had talked about kind of a neutral strategy yesterday, just based off the action we had seen beforehand. We weren't seeing the European movement at all. It was really just completely flat. And really all it was doing was setting up for a major move. And again, we expected the number to be lower than the 2.4 million barrels expected. Coming in over double, I think it really, really shocked the market. And, again, I don't know if that was the first round. I don't know if the forecasters were assuming there wasn't going to be as much travel during spring break as there actually was. But like I said, whenever you miss by over double, that's a big amount. But on the flip side of things, I mean, oil moved way more than I can't say should have, right? I have to say what historically it would have, if that makes sense. A typical miss in oil news will typically move anywhere from $1.30 to $1.60. It moved $2.67. So it did almost double what it was supposed to do. Not supposed to do, but will typically do. That's a really, really big move. It feels like there was definitely something in that. Obviously the data today kind of backs that up, but this was a big move and very unexpected. Because again, historically speaking, we tend to have specific moves depending on the percentage that it's off. And again, you can mix the API in with the EIA number. Big move, right? Big move. Now, the one thing that we did mention yesterday, again, we did call, we were talking about a potential neutral strategy. If we came in, if it was dead on, we didn't expect it to move. It did end up going through the top, but we had talked about being in this bottom third, right? The blue or the green area, looking for, some type of a way to get in. And we did have a pullback. And again, one of the strategies and one of the things that I do, particularly with my students, is we talk about a 6 times multiplier, finding trend on larger time frames and then getting entries on the lower ones. This was actually one of the entries, a long entry coming from the bottom quadrant up, and again, an absolute explosion. Now, let me drop this back down to a 30-minute. This is kind of what we're dealing with now. And I was joking yesterday that I was kidding. Like, it was not like a hold my beer situation. Like, you needed to get to 64 in one day. That would have been like a $5 move. But I was like, that's the next time we really have something clean. I mean, it's having some issues and it's stalling, but it's like, I'm like, I like gas prices where they are. They don't need to go over $3. I'm good with that, right? It came up, and then since that time, it has pulled back. It's found some support. It's found some buying. But remember, when we start throwing X's out here, we got a touch in here. We got another decent touch in here. There's kind of it didn't really leave with kind of explosion, but we're testing this zone again and again and again and again. And eventually, that zone is going to fail. When it fails, this is, again, just like yesterday, how with a couple other different assets out there that we mentioned. Again, people are probably getting tired of hearing parabolic retracement. This was a parabolic move. Uncharacteristic, news-based, gut reaction type trade. Those tend to retrace back to the origin of the move. So we're currently around 62.80. To retrace back down to the origin of the move, it would take down to probably like a 61. So it's not quite there yet. It is in the middle. Ideally, we like those higher. So I would say, right now for the rest of the week, I'd be keeping 64.35 on my radar. If we're able to break through this level, and again, probably right around the 62.50 level. Again, that's going to be a psychological level. And again, you can play this with a Harry Potter, get that confirmation entry in there, or you can take it as a little bit of a break. But on a 30-minute, we see nothing over here until we get much, much lower down to the 61.50. Right. So could there be $1 that we capture from here down to here? Yeah, it's absolutely a possibility, because that's the next time right here that we have a little bit of buyers stepping in. But could we retrace it all the way back down to the $61 mark? It's possible, right?
Yeah.
Again, any type of big news release or anything like that. I know that there was some Middle East talk or Middle East news earlier today that may have actually helped it a little bit too.
Yeah, well, and there actually is something else, and I'm going to mention in a second. But yeah, I mean, I've got the ATR up here at the bottom of this chart. If you don't, when Brian talks about expected moves, average true range is a way to sort of measure. You can actually see what this move did to the average true range. I mean, it just blew it out. This was a very unexpected move. I mean, if we go back in time, although now you don't see the chart, I mean, it does happen on occasion, but it's not something that you would. It's an anomaly, right? It's a spike. It's an emotional move that happened, and we are trying to hold this 62.70 level. It based here after the initial move once. I mean, it's just been treading along here twice. I don't know, 3-4 times. It keeps trying, but buyers do keep stepping back in. And the thing that I'm going to mention that I just saw is part of this could also be some of the tensions going on with Russia. So when you look at oil, there are generically 3 big regions that produce oil. We always look at the Middle East. We look at the U.S. I mean, that's what the market yesterday was all about, was U.S. Supplies, and that was, a drop in inventories that surprised. So you saw this take off. The other is Russia, and when there's tensions with Russia, if you missed it, Biden's putting sanctions on some of the Russian bonds. They actually got smoked overnight. It actually impacted the Russian markets. It impacted the ruble, things that we don't generally trade. But you need to know that it's out there. Russia is also a large oil producing country. Could this cause tensions with oil? Potentially. So that's just something else that's contributing into the story. It's not just the supply coming down in the U.S., the demand potentially popping as the economy heats up, but then there's international circumstances that could potentially disrupt those oil markets. So all things that can play into why oil might move. All right. Enough on oil. I do think and Brian, I don't know. Oh, there it is. I'll let you finish that one off. And then let's jump into equities.
Yeah, we're basically putting sanctions on 6 Russian firms that aided in cyber attacks. It's kind of one of those things. We're expelling 10 Russian intelligence officers. It's kind of like a deck of cards. Okay, we got our 10, then you kick out our 10 over there. So it all trades back and forth. And yeah, Russia is somewhat important, but remember, Russia is more of a big player in the natural gas. Not as much with oil. They are part of that OPEC Plus discussion, and we've already seen what has happened with the OPEC Plus discussion about, are you going to start producing more oil? Like, so what are they going to do? They say, oh, we're going to produce less oil and not send it to the United States. That's like the cutting your nose to spite your face type scenario. Like, you need the money from selling it. If you just don't sell it, oh well. So what? We have plenty of oil here that we can export. So it's not like we need the oil. And again, they're trying to produce more right now, so it's kind of a very interesting situation. And again, it goes back much longer than that. But remember, every time we declare sanctions or put any type of sanctions on Russia, it is strengthening their bond with China right now. And those two have basically said they are looking to remove the dollar. So again, there could be some more dollar weakness based off of these sanctions out there in the markets, which will affect a lot of things. Jumping across to really the news we got this morning.
The retail sales and the initial jobless claims. I think we should do one indice, maybe the Dow.
Yeah, I mean, these are all huge movers. We mentioned them coming in yesterday. I say, listen, they're already projected to be big. Watch them be even bigger based off of everything we've seen. They did almost double in some of these cases. Philly Fed manufacturing also looked great. So all this is great information. I would say, I mean, probably the ES. I mean, the ES is rallying. There was a small trade in this one yesterday, and we mentioned it coming back and waiting for Powell. You guys can see right here. We talked about there was a previous level, kind of like what we just saw in oil, right? A level that's been hit a lot of times. Well, here was your push through. There was your base. There was your pullback and grab, and you can see it went much, much lower. I think it actually got down to what? A 1 to 7. So again, big position. So now what are we doing? We're kind of pushing back up. And yesterday I drew a target up here at 41.50. I would still say there's absolutely no reason it's not going to hit 41.50 today. All the news is extremely positive. The retail trader has not had an opportunity to look for it yet. On a 15-minute chart, we really don't have an area to pull back. It's kind of, this was kind of the area down here. It was very, very little. And then this is a 7:30 release. So I would expect it. I would expect it to go higher, and right now I don't have a good pullback on it. I don't think NQ, same thing, is just kind of in a big rally back up again. And then YM, yesterday we talked about Powell coming in and potentially dropping it. You can see it kind of rode my line down and has pushed up, and it's kind of the same scenario. If we put kind of a top in here at this level, I would say anything above 33,800 would probably be a decent way to go long on this position. If you're looking for an area to pull back to, I would use most likely this level here. We'll take this one off. Let's get this so we don't, pull those. Let's put a price tag in there. If we can get to the open and we're at 33,773, I think that's probably a decent level where, we start buying. But again, it's Thursday. We have all this absolutely amazing news and no news for tomorrow. So for me right now, on a fundamental level, everything is saying up. And again, could this be a feel-good Thursday / feel-good Friday? It's setting up that way right now, with kind of oil prices starting to fall again, and all the great news for the equities saying that we're driving forward.
I just wanted to quickly look. How could you do this at Nadex? And I'm just going to take a quick peek at a couple of the equity indices. Here's the S&P 500. I mean, Brian's talking about potential upside. This is a call spread to the top side. You get a little bit of a pullback. Is there an opportunity to a call spread? Remember, if it drops through, now if you're buying or selling call spreads, I mean, if you thought it was going down, you can always choose a different call spread to sell. Hey, I think I think this is going to be, but notice if you're selling, it highlights in red. If you're buying, it highlights in blue, and it gives you the range. Now, if it's something you thought were going higher, there's some call spreads where the floor is near where we are right now. You get a little bit of a pullback. If it touches the floor, you're not knocked out. You have that opportunity for it to potentially come back. If we're looking for, maybe a little bit of a pullback here on the open, and then slingshot higher, call spread could be an interesting way to play. The S&P 500, by the way, looks almost identical to, say, the.
Yeah, they're all pretty similar right now.
Yeah, the Dow. I just got to get over here, and it is kind of nice that they're on the chart, so you can just kind of find them. You can take a look at some call spreads where you're near the floor. If you thought it was going higher, if you thought we're going lower and you wanted to play from the short side, you probably look for one that's near the ceiling. Right now, like for instance in the Dow, I'm not even seeing one that's. I mean, this is a little above the ceiling, so. but there's opportunities. Call spreads, interesting product. If you're not familiar with them, we've got some education on them. Parting shot, Brian. I know because we got to start wrapping it up.
Yep, 9 o'clock, so we got to roll. But I just wanted
But
to
the Aussie dollar was kind of
follow up.
interesting. We
Follow up
talked
from
about
yesterday,
it.
guys. Aussie
Yeah.
dollar. A lot of times, remember, it doesn't matter what the actual release is. You're looking for a miss, right? You're looking for the forecast to be wrong. Both the forecasts are wrong. 5.7 to 5.6, 30. It came in at 70. Here's the trade. There's the news release. I told you guys if we get close to 77.45, 77.50, look for that. Look to go short before the news release. Here's the news release. You guys can see it. I'll spread it out so you can see it. Right there. There's your 1 to 3. Went right down to the 1 to 3 target. Rolled back up exactly where we were last night. Again, if you're not trading those Aussie news at night, you're missing out. So again, add it to your kind of watch list of things that you do. Look for Aussie news, red, high impact releases. Doesn't matter what the number is. You don't have to understand it, but look for technical levels because again, that's how the markets trade. Technically based. That's it.
Opportunity. All right. With that, you got any questions for Nadex? We're here to help. We can't help you if you're having challenges. Please email us, customerservice@nadex.com. Brian is also very accessible. I know a lot of people ask for access to Brian. You can reach him. support@keeptradingsimple.com. Please email him. With that, a quick little recap. Oil, supply demand driven product, things moving it around. Definitely kind of interesting to keep an eye on. Retail sales blew it out. Initial jobless claims down. Equity indices all looking green for the open. And then again, if you want to go back and look at it, you might want to listen to the yesterday session just to hear about Aussie dollar and how you can start thinking about those opportunities later. With that, want to wish everyone good luck in the markets. We'll catch you tomorrow morning.